Hi, Matt McAleer, President, Director of Private Wealth, Cumberland Advisors, July 5th. One of those years where midweek holidays make the week a little bit choppy, but equities right out of the gate strong, similar to what we saw in Q2. That dispersion continues to grow between the large cap growth, specifically tech and consumer discretionary, and the rest of the market. Getting a little bit stretched. We cover that in detail in our Q2 wrap-up video. It's available on YouTube. Visit it. If you have any thoughts, ideas, questions, reach out to us. So what did we do at Cumberland in the trading room this week? Not an awful lot. Our solo trade was adding to emerging markets in our international portfolio. Remember, international trades on its own, but it also feeds into our global strategies, which are married to our domestic strategies. Emerging markets trading very well in the face of a very weak China. That's interesting. Taiwan, South Korea really carrying emerging markets. If China gets its feet under it at all, I think we can see some really constructive price action out of EM. So we'll be keeping an eye on that region, specifically Asia within EM. Let's jump back to domestic. Where do we sit? What are we looking at? In terms of our U.S. portfolios, both U.S. ETF and U.S. core, we have a little bit of cash. We're in the 6, 7, 8 to 10%. We did have some sales the last couple of weeks, looking to redeploy that. Although tech and large cap growth acts well, some of the areas, acts very well, by the way, some of the areas that seem reasonable from an entry are the previous strong spots. Basic materials, industrials that have pulled back off a big Q1, meandered in Q2, and now are offering reasonable entries. So let's see if we take advantage of any of these spots in the next week or two. The moose is on vacation, believe it or not. So we're going to toss it over to Shaun, Burgess, portfolio manager, fixed income analyst. He's filling in for John, and he has some great thoughts in bond land.
Thanks, Matt. Happy to be filling in for the moose today. Really an interesting week, kind of a tale of two markets. On the Treasury side of things, you had volatility continue. Remember, we talked about that volatility as we ended on Friday's video, as the market sold off, really kind of unexpected. But this week, you had some bondholder-friendly data. We saw the 10-year Treasury, the benchmark Treasury, come down about 18 basis points. That's a pretty big move on the week. You had ISM data, which is the Institute for Supply Management. You had initial jobless claims, as well as payroll figures today, and the unemployment rate ticking up to 4.1%, which really were bondholder friendly and supported the kind of cut sooner rather than later narrative. So the market responded by moving lower in yield on the week. Now remember, these are good figures for bondholders, but the Fed is really going to be data dependent. So markets try to front run the Fed. The Fed is going to look at the data as it comes in. Next week is going to be very important. We have CPI on Thursday, the 11th. We have PPI on Friday, the 12th. Both of those numbers are going to be very important to support the narrative moving forward and really give the Fed the information it needs to put out some cuts, whether that's September, November, December, whatever that may be, whether 1 or 2 this year. They're going to look at those numbers. They need to see a trend. We had some good inflation data in the last read, remember, so we need to see information that's supportive of that downtrend in inflation. That coupled with those kind of cooling jobs numbers that we saw today, or jobs figures, will help to support the Fed as it looks to institute cuts at some point later this year. So next week going to be very important. For municipal bonds, it was a very quiet week. You typically see this in weeks where you have a kind of midweek holiday. People are off desk, people take vacation. So it was much quieter. You were off a couple of basis points, 3 basis points or so higher in yield. But overall, very quiet. You didn't have a lot of supply either. You had about 400 million in new issue on the week, which is really quite low. So where Treasury saw a good deal of that continued volatility as the market looks to kind of front run the Fed, municipals were much quieter. There just wasn't a lot of supply. Next week, you've got about 10 billion on the calendar. So a decent calendar. We'll see if kind of municipals can follow treasuries. Remember, municipals are slower, right? Treasuries are seeing much of the volatilities, and municipals follow through upside, downside, but at a much slower rate. It's a different buyer base. So we'll see if municipals can be buoyed by some of this downwind or downtrend in kind of treasury yields. So, our longer term, we have duration targets in place. We look to fill those through the new issue in the secondary. So we'll see if we'll get some opportunities to put some funds to work to kind of align portfolios with our longer term outlook for where interest rates are going to be and potentially when the Fed starts to cut. So we'll see what the week brings, but we're going to be watching CPI and PPI very closely. Those are the numbers to watch on the week. So we'll see how they come in. Thanks.
Great info, Shaun. Thank you. We'll see you next Friday. Everybody enjoy the rest of the 4th of July weekend.